Good morning and welcome to Trade Talks with Jitesh. This session will be more of a broader perspective, weekly time frame and monthly time frame. We'll be discussing on what was the month of April and what we expected and how we thought that market would pan out. And on the weekly time frame, we'll be having a brief scenario that what was the week before and what we have planned for the next week. So let's dive directly onto charts. Last month was a strong bullish momentum with a 700 range, which I don't expect for the current month, frankly. This momentum, downward shift momentum halted and the upward trend picked up. But this trend was of a less volume when compared to the month of March, which hints us that this momentum might not continue for the coming month. And one more thing, we need to be very careful that market volatility also dropped to significant levels of roughly 10.9, 10.8 levels. And as we can see that Fed is pivoting towards stopping hiking cycle, and it might even reduce the rates, or even it might give us a sign where recession is imminent to protect the economy. So this might hint us that recession is confirmed and further downward move might happen. So either there is a consolidation or downward move which might come into play in the coming months. So we need to be very careful, and if there is a sudden drop in VIX, it's better to hedge your portfolio by taking long puts on of a far expiry, so that if at all there is a recessionary impact which might come into play, our portfolio is hedged. So overall scenario is that market is bullish with a consolidation expecting for the next month. As we expected that gold by Nifty by gold ratio to come around 7.8 levels, 7.9 levels. Right now it is at 9.1 level, 9.2 levels with the immediate resistance at 9.2. That signifies that the gold upward trend might continue further ahead and Nifty might consolidate or shift downward, so that this trend might continue further towards 7.8 levels. And if market comes at around 7.8 levels, that confirms that the market is into recession, and this impact might come into play once we see 16,000 levels or 16,500 levels in Nifty, and gold might even cross 62,000, 63,000 on Indian market. So this is the overall broader picture what I have for the Nifty. Let's dive directly onto weekly charts. Weekly also market had a fantastic moment on the upside. There is a huge liquidity at this particular place. So the upward shift might be there, but this week might be consolidating as we have FOMC meet also on 4th. So the low VIX scenario might not exist as of now. The VIX might start rising before 4th, and this week might be consolidating with volatility. So we need to be very careful on trading direction. It's better to cut quantity by half, so that if at all we are wrong, we might not have significant loss. So the trade plan for the next week, and as we discussed last week, we on the scenario number 2, the particular scenario number 2 played out in the market. We took few long bets and we booked up, and the whole week was profitable. And one more thing, we need to see that as VIX has dropped by 10 to 10.9, so daily vol will be roughly around 122 points. Weekly volatility will be around 271, and monthly vol will be around 570 levels. And this momentum, I don't think so might continue for the next week. So the broader range, there are 5 scenarios for the next week, what I expect. Let's dive directly onto scenarios and what are the trade plans, and which I see most probable scenario which might happen in the coming week. So Nifty might continue with a strong upward shift, halting at this particular point at 18,344 levels, and then again the momentum might continue. For this particular trade setup, if market gives a close above 18,200, then we might consider this position, and the VIX should also be continuously low. If VIX starts rising, then this play might not come into picture, and we need to be very careful for this particular trade setup, because sudden reversal might be there at 18,350 level, 334 levels. So this might be confirmed only after crossing 18,400 levels. So if there is a close above 18,200 and there is a dip, then we might take few long trades with a very tight hedge using puts. So this is less probable, but might happen, seeing the momentum last week. The most likely scenario which I expect is scenario number two. Market might go in a consolidation range, bullish consolidation range till 18,350 levels, and might expire within this range itself, 18,350 to 18,161 levels. In this kind of setup, at every pullback, we can have bullish skewed short straddle, so that market might give us a range expiry and that range is captured. So once there is a dip, we might enter into short straddle, and this short straddle and bullish skewed short straddle, so that if at all market there is a shift in market momentum, still we are profitable. So I expect a range of roughly around 18,160 levels to 18,350, 360, 345 levels. So on every dip, I'll be having short straddle skewed towards bullish side. Then third scenario is which is very less likely, that market might consolidate in a very tight range. This might happen only when there is a very strong supply zone and demand zone at a very narrow range, and there was a volatile spike. Then only this might happen. If there is a volatile spike and there is a drop in volatility, then this scenario might come into play. So as we know that there is volatility before a trend and after a trend. Once before a trend starts, volatility will spike, and once the trend is about to end or it is at its ending stage, we can see a volatility spike. After a volatility spike, there is a consolidating range, a narrow, tight consolidation range. At that particular period, we might see this kind of scenario. And then fourth scenario is bearish trade. For this setup, we need a confirmed daily close below 17,980 levels and a slow shift towards downward. This might come into play only if we see a international bearish market momentum picking up. So we need a confirmation only at 17,970 levels. We need a daily close and VIX rising above 13. Then we can confirm that this trade setup might come into play. This is also probable, but highly probable is scenario number two, which I expect that market might continue the momentum, and we might see expiry somewhere between 18,350 levels to 18,150, 160 levels. And fifth scenario is this, where there is a sudden spike in momentum on the downward, and we see a daily close below 18,000, 17,872 levels. That is below this low, and momentum picks up. VIX also rises above 14. Then in this kind of scenario, the fifth scenario, we need to buy puts on every pullback. Like there is a pullback at this demand zone, we buy few puts at this place. We buy puts at this place at this particular demand zone. So we need to be very careful trading in this kind of scenario. And this, if momentum picks up on the downward trend, we might see 17,450, 460 levels within this week itself if market momentum picks up. And this can happen only if we see a news driven market, especially because of FOMC meet. So as this is a truncated week, already Monday is exhausted. We have only four trading sessions. So this is less probable. We might see this into coming into play. And if at all if there is a sudden news driven market also, then we might see fourth scenario coming into play. And we might see somewhere expiry between 17,960 or 18,000 levels. So the overall picture is this, and the trade plan we have set with a very tight stop losses. So let's see how the market behaves in the coming weeks. And the overall picture for the Bank Nifty, similar thing I'm expecting for the Bank Nifty as well. Bank Nifty, I am expecting market to consolidate between 43,800 levels to 43,200 levels with a very tight range. And as we can see, there is an overbought scenario in RSI as well. And the volumes is dropping with every rise. So this also signifies that market momentum might be fading off. And we might see a consolidation which happening at in and around 43,000 and 43,800 and 44,000 range. And if this consolidation is happening, then and there is no significant drop, we might see a upward swing taking us all the way to 44,600, 44,800 levels as well. So the momentum is strong on the upside. So it's no, so only at supply zone, specific supply zone, we'll be taking few short trades with a very tight stop losses, as we have taken in last Friday as well in both Nifty and Bank Nifty, which got stopped out on Monday. So not as expected. The trade plan was very tight. We were hedged, so the expected loss we have taken that. And I'm expecting this consolidation week again. I'll be taking short straddles, bullish skewed short straddle for both Nifty as well as Back Nifty for the coming week. And on daily basis, morning, I'll be discussing on the trade plan, how the market is behaving. And FOMC meet will be very crucial. We'll be having a trade plan before itself, well prepared for the FOMC meet. Thank you for joining Trade Talks with Jitesh.